afternoon, everybody. Welcome to the TraderMerlin Show. It is your short week Wednesday edition of TraderMerlin. Hope you had a great 4th of July. Hopefully you came back with all your digits and all your faculties about you. If you were living in my neighborhood, it was crazy just all night long. Just remarkable how much money people spend on it, blowing things up. Anyway, it was fun. Hope you all did something fun and had a good time with your family and friends and celebrated this great country that we live in. Now, the topic for today, as you guys can see here, says reluctantly getting back to trading. You know, I mention this almost every time there's a holiday week, whether it's that shortened Thanksgiving week, the shortened Christmas week, even the New Year's week. Kind of the best recommendation I can always give is just move away from markets that day. Don't trade. And today's a good example of it. It was very boring out there. Now, yes, there was some moves in the Russell, some moves in Bitcoin, moves in crude oil, but all in all, not a lot of great moves. And I had one trade I'll let you guys know about it. I put an order in last night on Rivian to short Rivian today as it came in overhead supply and missed my entry by like just a few cents. Drove me crazy. So basically today was a wasted day for me. I hope your trading went better than mine because I really didn't make any trades today. So there we go. Let me start off with kind of the overall market, and then we'll look at listener questions. None of you sent in questions over the weekend other than 4th of July. Happy greetings. So thank you very much for those. But if you have questions, send them on in because I don't have no questions for you guys from you today for today's show. So I'll make some stuff up as I go along. So let me start with the bottom, work our way to the top. Bitcoin, for no particular reason, looking a bit rough over the past few days. You saw this nice breakout yesterday. This is your Monday session on the Bitcoin futures. When Tuesday was closed, I could show you the spot chart, which would be better here, but down 3.08% from Monday's close to where we are today. But still, all in all, I still think it's respecting kind of the lower part of this bull flag pattern here because it hasn't started to make new lows. So I'm pretty happy about that. From a crypto perspective, most are holding up rather well. So even though it's down 3%, is not the end of the world. Technically, I still like it because it just has not been making new lows. That's great. From the index perspective, our Russell 2009 down 1.27% today. This is one that I was eyeballing, thinking I might short it, but I just felt apprehensive today. I don't know, maybe my faculties aren't all there, a little bit foggy from what happened. Foggy what happened over the weekend. You know, it's 5 days of just partying. It's an extended week. Next time, let's make sure we have 4th of July on a Saturday. Make it easy for us all. So Russell 2000 down 1.25%, 1887 is where we closed at today. Again, technically, you had a minor little double top happen on Monday's session, but all in all, really not a lot going on from a technical pattern-wise. So I do think that since you have that double top, you'll see a little bit more of a pullback. The question is, does the Russell pull all the way back down to 1836, which would be about another 50 points lower from here, which would give you about a 2.5% decline, and we'll see. That to me is definitely on the plate. All right, gold. Actually, the only real exciting thing was silver for me was up 1% today, so I enjoyed that because, as you guys know, I'm long a lot of silver at this moment in time. Gold, though, didn't fare as well. It was down 0.38%, closing at 1922. I really thought we'd see more follow-through from this hammer we got last Thursday on the 29th. Didn't. We had 2 days of follow-through, and then today pretty much giving it, no, not all of it back, but giving a bunch of it back and continuing that downtrend that's intact. So the question now for me becomes, are we going to challenge those lows that we established on the 29th and maybe even break below this yellow box at 1890? Or does it stabilize and start to move back up? I feel that there's just some uncertainty going to start to creep into the market here because there's just unbridled enthusiasm on the part of most investors. Therefore, that generally tends to tweak things a little bit. So here's your gold drifting down as we speak. S&P 500 is your 5th place finisher, which is, we'll call it pretty much unchanged on the day. It was down 0.19%, closing at 44.83. And from a technical perspective, we're still way up in that supply zone that I've got mapped out in between 4509 and 4439. So you got a 70-point range there for your supply zone, and you're up near the top of it at 4483. So let's see, that's a 16 points away from breaking through that overhead supply and ripping to the next overhead area of supply. Is Tesla done with his run? Earnings in 2 weeks? You know, we'll look at that one. If you saw what happened on Friday's session, actually on Monday's session, all of those EV companies we talked about last week were soaring. So I'll bring that up here in just a sec. Good question, or good comment, Big Ed. Hope you had a fireworks show out there in San Diego this weekend. Let's see. 10-year, Right here is what you had for today's session. Ripped. And this is what I've been anticipating. I do think you're going to see that 10-year continue to rally. I think that yield curve needs to come back to normal. And since the short end of the yield curve isn't falling yet, that long end of the yield curve needs to start to increase. And again, as the Fed keeps unwinding their balance sheet, demand for bonds decreases, at least the 10 years, we'll probably see higher yields on those, right? Why would I bother buying a 10-year at 3.9 when I can get a 1-year for 4 plus? So, yeah, demand for the 10-year declining. Therefore, you're going to see these yields start to move up. Question for me is, do we get to that 4.335, which is what I keep looking for that we saw back in October of 2022. All right, podium time. NASDAQ. Unchanged on the day, but more volatility than we had on that half day on Monday. I hope nobody traded that half day. That was just such a boring day. Like I looked at the markets a couple times, but didn't do any trades on that one. Oh, you watched the Jeff, you watched the Brett Johnson interview? Wasn't that great? I mean, sorry, I'm bouncing all over the place. I'm so scatterbrained today, but I hope more of you watched that interview. It's just an amazing story, and I hope you agree with me, Jeff, that that's going to be a movie. Like his story is going to be a blockbuster movie, and I liked it because I learned a lot about kind of what goes on in the underbelly crime syndicate part of the world, where, how to protect your information, how they're getting your information, what they're doing with your information. It's really scary, but that Brett Johnson interview, man, I loved it. Absolutely loved that one. At times I was wishing that the interviewer, Lex Friedman, would have just shut up and just been like, okay, stop asking questions. You already got him going. Let this guy talk. It's just a fascinating story. All right, so there's your NASDAQ, and we are still stuck at those highs, which is a great sign for anybody who's bullish. Now, this dovetails into Big Eb's question of, is this Tesla run done? Earnings in a couple weeks. Yeah, we get our big kickoff to earnings here in the next week, where it starts the earnings season, and then we'll get some of the big names roll through. Is it all priced in? I don't know, man. NASDAQ still feels really strong. I thought we'd see a bigger pullback all the way down to 14,256 was my target on that one. We didn't get it. We didn't get that follow. We got a small pullback, just a couple percentage points, and now holding right near those highs. And again, the high we established on the 16th of June on the NASDAQ 100 was 15,475. So we're just off of that. And after you break that, there's really quite a bit of room to run, at least to 15,985, somewhere right in there. So yeah, I based off this chart, I feel like NASDAQ is still going to keep on moving here because it's right near those highs. Tomorrow and Friday will probably be the determining factor here. Do we break it, right? Or is just volume so light? And this is one of the reasons I tell everybody to stay away. Let me add on volume here. And today's volume is kind of getting back up there for the NASDAQ, but you see, obviously, the half day. Always stay away the half day. But let's look at things like the triple Qs. Notice how low the triple Qs volume is today, right? So on the triple Qs today, you had 34 million traded, but on Friday's session, 58. So you're just about half of your normal volume. That's pretty weak. I don't like trading really light days like that. Same thing for the S&P. Here's SPY. On the day, SPY had 58 million shares traded of the ETF, and on Friday it was 104. So right around 50% of normal volume. That will probably remain in effect this week. I anticipate in the next couple of days being lighter than normal, and then we'll really start to pick up as we get back into a full trading week next week. So take the rest of the week off, guys. I think it's going to be a boring remainder of the week. Granted, there might be some movers out there. Jeff says I will never talk to another telemarketer. Why do you talk to them anyway? You should never talk to telemarketers. No weekend for July 4th until July 4th, 2026. Okay. That's a bummer. We've got 2 more years. Dang it. So that was your third place podium. And here's the dollar index. Dollar index moving up a little bit, which maybe is part of the factor why we saw some negative moves in the market, at least for the S&P and the NASDAQ. 10-year was up, dollar index to 103.34. And then finally, leading the charge is crude oil. 71.79 is where we're at right now. That's 2.87% to the upside. Now, the thing to remember here is you do have OPEC meetings going on. It's today, it's tomorrow. I think it might be Friday, but I know it's today and tomorrow are the main OPEC meetings. And again, that could have a profound impact on crude oil. And I think that you can see that here with the volume surge, right? Volume definitely higher than normal. Today on crude oil, you had 430,000 contracts traded, whereas on the, let's go to Friday's session, you're only at 281. So 120,000 more traded today than normal, which is why you saw that nice surge up in crude oil. And again, any comment that they make about production cuts or those types of things can have a huge move on crude oil. So that was your number one out there today. All right, let me go back through some of these questions here since I don't have too much other to discuss. Let's see. Indigo Clover. Is there ever a good reason to take a margin loan for anything other than a trade? The margin rate in my retirement account is lower than the line of credit. So I'm a big fan of margin, right? I think using margin and getting margin is a great tool if you know what you're doing and if you can prove to yourself that you're consistent and you're correct, right? So from a long-term investment perspective, I haven't heard about taking a margin loan in your retirement account. That seems interesting. And I don't know whether you're meaning that they actually give you a loan that's tied to your retirement account. I don't know about that. That would probably be more logical than them actually offering you margin, because retirement accounts are supposed to be cash accounts, meaning you cannot have margin in those accounts. In reality, let's just say hypothetically that you did get margin in a retirement account, and the question is, should you use it? If you're good with market timing and you understand the principles of market timing, then I would say margin could be a great catalyst for a retirement account going forward. Because over the long haul, in a retirement account, you're typically buy and hold. So if you time the markets right and you're buying at a low price and you use margin to buy more, in theory, your rate of return would be exponentially higher because you're using margin. All in all, I think most people don't have a good grasp on market timing. I believe most people don't have a good, consistent track record, so margin shouldn't be done. If the question there for Indigo is that it's some kind of loan that you're getting, you can borrow money at a specific rate and you say it's cheaper in your retirement account, then I guess you have to look at why would you want to be borrowing money? What is the purpose for this borrowing of money? If we go back to the basics of, one of my principles of personal growth is you have good debt and you have bad debt. If you're looking to take a loan simply because it's cheaper in that retirement account, I would say forget it, don't do it. But if you have a purpose for it, and let's say you can get that loan at 4%, right? So you borrow 10 grand at 4%. Is there something that I'm paying higher than 4% on right now? Like let's say credit cards, student loan debt, maybe my auto loan, maybe I'm paying 6, 7, 8% on those, and I can borrow it at 4%. Take that 10 grand or whatever it is and pay off those other ones. That is good debt in my opinion. Bad debt is saying, oh, well, I'm going to go buy myself a brand new Peloton for 5 grand. And again, in 6 months, it'll just be a coat rack in my garage I never use. Or buying something that is you just don't need, that's going to depreciate in value and ultimately be worthless. That's bad debt. So if you can borrow at 4% and you've got a strategy that you've tested and you've seen a consistent track record that you're earning 8% per year, well, then why not use that? Borrowed at 4% and earn that rate of return of 8 or whatever it is. So that's a very loaded question there, in my opinion, to go, because there's so many possibilities there, and I guess I need to know more about what you're looking to use it for. All right, let me scroll down here a little bit and go to some other questions. Yeah, tap your house. No, thanks. Nope. Let's see. Plato says, thoughts on Kraft Heinz, KHC, bottom fishing. Feels like it may have found support finally. Also, who will the new aspartame World Health Organization news affect bev stocks? I didn't see that one. What is it, Indigo? Plato. What? I didn't see the aspartame thing. I don't touch that stuff. I stay away from synthetic sugars. Sugar is bad enough. I don't want a fake sugar. Give me something that's bad and make a bad or worse copy of the bad. Now I've got a double bad. So it's positive, double negative. So let's go with Kraft Heinz. K to the H to the C. Here's your Kraft Heinz, and yeah, it's been just getting slaughtered. Now, I'd like to, if I was looking to buy Kraft Heinz, which I am not, I would like to look at more of the factors as to why this is happening, right? We're in a period where food prices, for the most part, are continuing to go up. Here's Kraft Heinz having fallen from $41.50 all the way down to a low just recently of right around $35. I mean, that's a pretty sharp slide for something as low risk as a food company, right? We don't start cutting back on food like we would on maybe transportation and travel. So knocking down about 16% in the last 37 trading sessions for Kraft Heinz. Is it worth bottom fishing? Well, let's go out, look big picture. This is always how I start if I'm thinking of this type, and look at the bottom fishing picture. You're not really bottom fishing. Bottom fishing would have been this 2020 low at right around $20, but still, I think we can look at this picture and we can do the put on the bar box. It's the bar box now, Tom. You've renamed it for me. There it is. Where are we in relationship to that range is what I would be asking myself. And I would say that's my bottom fishing criteria, right? put this yellow box on here. What I'll do, just to give us an idea of where we are in this, I'll just do a fib retracement, and we'll go from the low of that box to that peak. And it looks right now like you're about a 78% retracement, which is a Fibonacci number, by the way. I would say that actually might not be a bad point to consider being a buyer of Kraft Heinz. Now, I don't know the factors that have caused it to drop that much that quickly, so I would certainly want to look into it, but this would definitely make my radar as something, hey, I know Kraft Heinz isn't going away, right? We know we're going to continue to use those products. Something may have happened that caused a decline like this, so let me see if I can investigate it and see if it's worthwhile. Does it offer the potential upside as an investor to buy those shares at, let's say, $35? And do I think it's going to get back up that 44? And then the third part of that would be, how do I time it, right? How long do I expect to keep it in there? And then ultimately, what will be that rate of return, right? So if I think it's going to take me another, this is a weekly time frame here. So let's just assume that we see it bounce back up. I don't think you're going to see that. And, if you do, maybe you see something like this. Okay, that would be great if I got it to go up 25% in 30 trading sessions. Amazing. It's a month and a half. But I doubt it's going to have that clear of a trajectory to the upside. So sure, I think Kraft Heinz might be a candidate for some bottom fishing. I certainly wouldn't go all in on it and do some more research onto what factors have caused this sell-off. Might be kind of interesting to go out there as well and look at the institutional side. Like, what are the upgrade downgrades looking at? We talked about that the other day, where I believe that most upgrades and downgrades are going the opposite direction. They tell you to sell, they're buying. They tell you to buy, they're the ones who sell. So I would like to look at that as well, just to maybe see what the institutions are thinking with regards to Kraft Heinz. But all in all, I think Kraft Heinz would probably be a safe bet. You can see that for the past couple of years, going all the way back into 2021, it's just been traversing sideways in that yellow box range. And we can go all the way back to this low point here on February 12th of 2021, and we have not been able to break that low, which is right around $33. So maybe below $33 becomes your stop loss on this one. So I like it. I like it, Plato. Let's see. Any thoughts on Schwab now that the Ameritrade merger is complete? Well, no, I still am a fan of Charles Schwab. When we did that, when I did the article for Bar Chart, SCHW, when that article for Bar Chart, I mentioned that one of the 3 financial stocks I wanted to buy was Charles Schwab. And I had some puts that I had sold, which generated some great yield. For some reason, I kept seeing Schwab drift lower and lower. I think long term, you're fine. The merger's done. There's no issues there. I have no problems with the FTC or regulators with that. So the merger's complete, done. I think what you'll start to see now is Schwab take that merger and start to do some efficiency practices, which is going to be streamlining some of the operations of Ameritrade, right? Getting some employees that may not want to be there. There might be some layoffs because there's going to be synergies between Charles Schwab and TD Ameritrade. So I think you'll see benefit from that merger overall. Plus, I don't think that Schwab should have taken a hit like it did as being a quote-unquote bank, right? These big dumps here were because of First Republic and Silicon Valley Bank and others. So they're not in the same category. So I am still long-term bullish on Charles Schwab. Let me just look at the other ones. I mentioned Bank of America was not like, and that's BAC. I'm like, the chart doesn't look like that. There's Bank of America. So Bank of America for a while was doing great, and now it's just kind of diverse sideways. JP Morgan was the other one, which I sold puts on as well. Got some great premium. They have recouped all of those losses. Of course, remember, they bought the assets of First Republic, and they took all the good stuff. This is just what I hate. I hate big corrupt companies like JP Morgan. They took all of the assets of First Republic that were making them money, and they got a guarantee against any losses, and they dumped all the bad stuff that's in First Republic and left it in First Republic. And that was just the win for JP Morgan. And now JP Morgan's higher than it was before the whole financial crisis. Shocker. Let's see. Schwab is moving accounts over piecemeal versus moving all accounts over together, and they don't have Thinkorswim ready to go. Oh, didn't know that. Yeah, Schwab's platform is not that great. I'm not a big fan of Schwab's platform at all. Well, then that's at least that's interesting to know. There'll be some speed bumps along the way. I thought for sure it would be a little bit easier to migrate those over, but yeah, not something I've been paying too close attention to. Question, Mike, by the way, could mean having to migrate portfolio to Schwab platform. I know one trader who got a notice that forced migration was coming. That's interesting. I've got Ameritrade and Schwab accounts, and I haven't had any notices from Ameritrade, so maybe I'm just not following my email close enough, or yeah, that's kind of a strange one. Schwab is keeping Thinkorswim. Active options traders will be moved last. Okay. I'll get to yours in just a second. Skilled TFC. What will it take for regional banks to recover? Confidence in the system, which I think is starting to come back in, right? The longer we go without another bank meltdown, the more likely it's going, there won't be any more. Although, how many times have you read an article or turned on the news or some financial program and you hear about some expert in the industry, some analyst saying there's way more pain to come. You're going to see more banks going under. There's always that possibility. So let me go look at TFC, which I don't know the financial situation of this one at all. This is one of those regional banks that I have not followed. And again, I have a whole bunch of regional banks down here on this list, but you haven't seen a lot of them really come roaring back, right? Zion was another one. I haven't looked at that one in a while. TFC looks just like Zion Bank. So what's it going to take? I think time. I think time will ultimately you have to wait and gain confidence back. So the Fed and the Treasury did what they could to make us all feel good and warm and fuzzy. Same with the FDIC about holding on to these regional bank stocks. I think that the biggest winner in there was going to be the big names, which is why I mentioned Bank of America and JP Morgan. And then again, I thought that Charles Schwab, totally different ballgame, shouldn't have been involved in this whole sell-off, but they were. Big F says, yep, there's more bank failures that need to happen most likely. Well, the more time passes and we haven't heard about them, to me, the probability that starts to diminish, because over time, they're going to start to shore up any of those issues, unless they're right now moving out the valuable assets out of these companies, and then it'll all implode once they get all their money out. So all of us, I stay away from banks just like airplane companies. I don't stay away from them, but I got to be careful. As you guys know, I was doing really well with a bunch of them, and then First Republic burned me, FRCB, which has been wild lately. So it used to be FRC, now they're bankrupt. They put little B behind it. This looks like a cryptocurrency chart. I mean, this is just absolutely horrible. Up 10% today. And the last couple of weeks have been really crazy. You saw it go from 17 cents up to a high of, what was that high on that one? 95 in just about 2 weeks. Pretty crazy run. Today was up about 10% on it, but who knows? I don't think this thing's gonna actually get back and become anything. So don't jump on it. I think this is. Let's see. Indigo says TSC is the 10th largest bank in the U.S., but still considered regional. You have to look at their assets under management. That's really all about the market cap and assets under management. Curry ketchup. Let's see. Lisa, recently Schwab sent emails about SEP and Simple IRAs being moved September 1st. All their accounts won't be moved until 2024. Wow, okay. Spoken them blank. I don't recall any recent emails from TD. Yeah, I didn't get any. Of course, I don't have any. I don't have IRAs or SEPs at either one of those, so maybe that's treated different. Just trading accounts at Schwab and at Ameritrade. All right, let's see. Skilled Stocksman. Euro and Australian dollar were nice shorts today. Euro has a nice downtrend on the weekly, 3 weeks. So if we look at the currency side of things, you obviously have the Australian rate announcement, which is weird. I could swear they were at 3.85, but I guess they're already at 4.1, which is the rate increase there. Here is your Aussie dollar, which long term really hasn't presented a lot of opportunity. The last couple months has been a bit more volatility. A little bit of a pullback today. You can see this today. You can see that nice red candle. And again, I think that has to do with their rate increase. They actually jumped to 4.1, but apparently I thought they were 4.85. Apparently they're already at 4.1. So it shows you what I know. All in all, short on that one. It'd be interesting. I think you trade shorter term if I'm not mistaken. So you're probably out there looking at the hourly, I think, as your time frame of choice. And this makes it much easier to see the opportunity out there. As you came up to these overhead supplies right around 67, there's your first short opportunity. And this one looks like it hit to the absolute T and sold off. The question is, do you keep holding it, or do you think it's going to stop at this 66.45 mark and bounce back to the upside? So I like that one, even though it is going counter trend. Sometimes going counter trend is great, like Rivian today, right? So here's my order on Rivian. You look at this chart of Rivian, and I'm just like kind of shocked at how much it's moved. Here's your daily. But you had some huge moves. Rivian was trading at $13 back on Tuesday, the 27th of June. And then today, hitting a high of $21.05. And it's funny because my order was at $21.12. I had an order to short at $21.12. Son of a... And it was just because that was this high price right here. If you go back to the candle on the 15th of February, its high price was 21.15. So I had a limit order to sell short some Rivian at 21.15, which was a gamble in my book, but it just feels like it's been too far, too much. All the car companies we talked about last week ripped, right? Tesla came out and said, hey, we're doing a lot more deliveries. We're racking up the deliveries. Things are looking great. And that was just optimism for all the car companies. Let me get these lines out of here. So there's your Tesla. As Big Ed was saying, is the run over? Well, I mean, it's hard to say this run is over. That trend still looks strong. It's gapped up above these highs we saw from Wednesday the 21st, so that's great. You zoom out here a little bit, you do have a couple small little supply zones right around 288. After that, you're looking at getting up to maybe the 310 mark. So it still looks great, although my gut tells me pullback's coming. Of course, how many times have I said that to you guys? And it doesn't pull back, right? So my gut would tell me there's a pullback coming, but I just don't see it happening right now. It feels like just really strong. And if this does continue, you'll see the NASDAQ continue to rip up. NIO is one of the other ones, right? So NIO, that same window of time, didn't have near the percentage gain that Rivian did, but it was at $7. Now it's at 10. I'm pretty sure most of us would enjoy a 40-50% move in just under a month. Not too bad. Let's see. Let me read these bad boys here. Tom says, I was at a 2-day Thinkorswim event. They confirmed that Schwab acquired TD for the assets under management, aka trillions of dollars of customer accounts, and Ameritrade's tech, which was primarily a Thinkorswim. Yeah, and that's typical. They're buying asset base or technology, and that's what we talked about with Robinhood. With Robinhood, you're not buying the asset base, right? Or you're not buying the technology, because their software's garbage. If you look at their asset base, so assets under management is really what they're looking for, and clients. So I would say when they make these acquisitions, it's three things. It's going to be they're buying some piece of technology and all the customers that go with it, or they're just going for the customers and their money, the assets under management. If that Tesla run continues, where will be the pullback after earnings? There will be a yes. And that's a tough one. You know, Big Ed, we talk about that many times on this program is I don't really like to trade earnings, but when we get to something like Tesla, which of course would be your popcorn trade of the day, one of those crazy volatile, bounce factors like that, when that happens, I'll maybe go out and put orders that are 15, 20% away from the closing price that day and see if I get hit. Just take wild shots out there and see if it happens. Or sell calls or sell puts at really exaggerated levels because the premium is going to be high on those anyway. Now, that's a tough one. I mean, you got to have a stomach of rocks to deal with that, but it's definitely something I do, and I think we may I may do that here with Tesla here soon. I thought that thoughts on the airline booms, RSI way overbought on all these companies, but the charts look strong. Record travel upticks, or recession. Who's lying? Cheap oil may be a factor. Great question. So when we look at some of these airlines, let's just look at American Airlines to start. They have been on a phenomenal run. And going into the summer travel, the sense you're hearing from everybody out there is everybody wants to travel. I'm planning a whole bunch of travel stuff right now as well. Therefore, these airlines they're dealing with peak demand. Now the question is, is this kind of a forced thing? Are they not filling the aircraft? Was there some trick behind the scenes that's causing this one? I don't know. I think airlines have been beaten down ever since that whole COVID scare, which you saw here, right? Here's your COVID drop to the bottom and then took a while, but now we're slowly starting to drift back up. I think that most of us, I speak for myself, but I'm sure many of you would agree, that as time passes and we don't hear World Health Organization or Dr. Fauci tell us that we're all going to die from this virus, you start to get more comfortable with it. I mean, just walking around this weekend at the beach and going to the baseball game, you don't see masks out here anymore. So I think people are getting more comfortable with that. And travel side of it, flying on an airplane, I think makes people feel they're better about it right now. Did you say a pilot shortage? I don't know if you're joking or serious, but we had money shortages, we had chip shortages. Hey, we got a pilot shortage. Could be a pilot shortage. Anyway, do I think it's done? No, I think it'll probably, everything continues until it doesn't. That's my attitude. And this one looks like it's going to keep on continuing. However, that said, I do expect there to be a pullback on this. You haven't had a red day. Oh, there's one small red day on American Airlines going back to the 29th of June. Other than that, it's 1, 2, 3, 4, 5, 6, 7 up days, one down day. I'll take that any day. How about United? United also on a great run. Not as good as American Airlines, but going from $41 all the way up to 57, pretty nice run. Let's look at this one. I used to love Southwest. Oh, they're coming back with a vengeance as well. So Southwest Airlines was coming from about $28.50 all the way to $37. So they're also looking great on their pullback. The good thing for anybody who's looking long on Southwest Airlines is they've broken this downtrend. I could probably throw on some moving averages here, and I won't use a short-term one. Let's put on like a 200, and you can see, yeah. So we've been pretty much below that 200 period moving average since 2021, and now you actually like officially broke above it. You retested it, so now this feels to me like Southwest Airlines has certainly switched. Is it really? There's a pilot shortage. That's it. Fill out those job applications, guys. Pull your Leonardo DiCaprio and just say you're a pilot and make some big money. So, yeah, pilots looking good, or airlines looking good. There's obviously many more I can get into here, but I just wanted to bring up those three. Stay with it long. Wait for the pullback if you're looking to buy in. But airlines looking pretty damn good right now. I gotta look into that. I didn't know there was a pilot shortage. That's funny. That was something. Looks like Christmas every day at SeaTac. Yeah, and they keep expanding John Wayne Airport out here as well. Can you talk about how do you get into stocks that are in an uptrend like Lilly? So first off, I can't trade LLY. It's drug stock. Can't trade Eli Lilly. But how do you get into it? Pretty simple. You look at these moves and you say, okay, I'm expecting a pullback. I'm not going to buy, and this is the same thing. If this could be an airline stock, they all look the same right now, right? We're seeing huge just surges in a lot of different sectors. Airlines being one of them, drugs can have that period of time as well. So Eli Lilly here, you've had this big uptrend. I'll just say it started back in March of this year. March 7th is really that low that was put in. All of a sudden, it's gone from a low of around 309 to currently at 465. So 158-point move to the upside. Pretty impressive. Well, I'm not going to buy it just because I don't want to chase anything. I like using things like Fibonacci, which doesn't have really anything to do with price. It's all psychological. And using that as an error to maybe help me identify points I might want to buy back in on this security. So let me bring up lines, and I'll put those at the important fib levels like 38%, which is right there at 408. I'll put one at the 68, so 618. And I'll also put some of the intermediaries, and I just do this to see if things line up and give me an idea of where there might be demand on top of demand. So they call it confluence. Now, I don't usually use the 50% mark because 50 is not really a true Fibonacci number. It's not part of the sequence. But I take this out, and now each of those horizontal lines there represents a fib retracement or some Fibonacci level. Now, for me personally, the only one that jumps off the screen, well, there's two. It's this one right here, which is at 370, which would be, it was a nice rally, it dropped, and then ripped out of it. The only other one would be this 432 mark, which would probably be more logical, right? To see a pullback from 432 or 465 down to 432. And I just wait for a pullback at a point where I'd be happy owning this. And I would say for anybody who's looking to do that type of strategies, Oculus, I would be looking at options. So options would be the way, right? So my, let's say I wanted to buy at this, 432 mark. Well, I would go to an option chain. I'd look at selling puts at 432. I'd probably do 30 days or less, right? And collect premium. And if Eli Lilly keeps rallying, I'll still make money on that rally. If Eli Lilly comes back down and I end up buying it at 432, great. I not only keep that premium, but I also get to buy it at a 7% discount. So that's how I would approach it. Not just Eli Lilly, but any of these other ones. Again, I can't trade drug stocks. It's not in my trading plan, or it's in my trading plan. I can't trade them. But like those airlines, great. I think there's definitely some opportunity there, but wait for the pullback. My flight simulator account is experience. Or you go to Dave & Buster's and do that little airplane machine. Yeah, that counts. How many dollars you spend on the airplane simulator, Dave & Buster's? I have to wait for the pullback on Lilly, but that chart is impressive. It is. It's definitely impressive. Absolutely. Let's see that. Oliver, I want my portfolio to look like Lilly. Don't we all? I mean, it's a beautiful looking chart. I will say that. And we'd all love to have our portfolio have rates of return of 51% in 79 trading sessions. Is it doable? Sure. That's not an impossibility, but consistency like that is pretty tough to get in an investment portfolio. Said that 618 level looks really nice. Yep, that was that. I think that was this 370 mark. But again, we are a long ways away from that 370 mark, right, Simon? I mean, that's not high on my list of it getting to that one. Let me make sure. I'm pretty sure that's what that was, 618. Yeah, that 370 was the 618. So, yep, I like that one as well. But, your odds of getting there are pretty slim. I mean, given the strength here, I don't see it. It'd have to have something dramatic happen for it to fall from current levels back to 370, which would be 61% retracement or 20% pullback. Ouch. That would be pretty brutal. Okay, so today's topic, as I had the title up here, was reluctantly getting back to trading because I really don't feel like maybe I'm just not all there, and I just didn't really see anything that was that great today. So I'll probably look again at Tesla. Tesla actually was one I was thinking of shorting, just because that gap is going to fill at some point. And for me to get short on Tesla tomorrow, I have to wait for this line to break right here. So anything below 275.11 will be a short opportunity on Tesla tomorrow, but I just don't see it happening yet. I have an alert set on my platform, so we'll see if that one hits for me tomorrow. I have a couple other things too, but Tesla's one I definitely think is going to be hit with a pullback here soon. I think Big Eb echoes that sentiment, like it's got to pull back. This has got to be over soon. Well, yeah, I learned to never say that with Tesla. I just wait for it to do what I think it's going to do, and then when it does it, I make my trade. Oh, there's the chart right there. All right, so let's go to your economic calendar well, I did it for today, but let's go look at what happens tomorrow. So here is your economic calendar for tomorrow, the 6th of July. On Monday's numbers for manufacturing were not good. We actually saw a contraction. We saw a contraction in the manufacturing data. The PMI manufacturing data was not good on Monday, so that was negative. Unfortunately, it's not the most critical info. Coming up tomorrow, you can see here for the U.S., you've got unemployment claims, you got trade balance, you have ISM services PMI, as well as final services PMI, JOLTS job openings, and then crude oil inventory. So I do expect a volatile day for crude oil, not just because of the oil inventories, but it's going to have OPEC meeting written all over it. You also have challenger job cuts and ADP non-farm employment change. So you have a lot of U.S. data making up for lost times, if you will, since we had a half day and a closed day, releasing a whole bunch of announcements tomorrow. And that is pretty much it. On the earnings front, I didn't really see anything that's noteworthy this entire week. All right, so I don't see anything really that was noteworthy on that. There's no major names that reported today, unless you think Trilogy Metals is a big one. It's really all about next week when we start to get some bigger names in that earnings space. So let's see. Thoughts on silver outperforming gold today by a decent amount? I don't put too much emphasis on a one-day outperform. If we go over here and look at SLV today, it's had 4 up days, even though they're red candles. There's been 4 up days in a row on SLV. Great. It's gone from a low of 20.44, and now we're at 21.21. So take an 80-cent pop any day. You're looking at almost 4%. Great. But if we look at GLD, they're fairly similar. One day of outperformance, I don't really put any weight on. If there was a string of outperformance, let's say silver continues to rally and gold starts to sell off, then that makes me a bit more curious. But this is kind of like Bitcoin and Litecoin. They're cut from the same cloth, if you will, right? And I don't expect them to have too much of a deviation or to separate too much in their price action. So let me see if I can add it on here. There's GLD. Let's add on SLV. I'll add that. That's weird. Silver dollar resources. Where's the ETF? There we go. All right, so I added silver on here. And the percentage moves look like they're bigger, and I think that just has to do with the price point of it. Silver can be a little more volatile because it's a little bit cheaper. People tend to, the investors with not a lot of money tend to go towards SLV. Those with more money tend to go towards GLD. But they still have the same basic pattern. You're just seeing more dramatic moves from a percentage perspective on silver than you are seeing with gold. But they tend to seem somewhat lockstep. I know they look exaggerated here percentage-wise, but you notice that the moves are tied together. When gold goes down, silver's going down usually. So again, I don't put too much emphasis on one day or 1 week outperformance here. Silver outperforming right now, which is great. Gold's up 5% on the data you see on this chart. Silver's up 14. If we go back to last, let's just say a couple weeks, they're both pretty darn close. All right, pretty much even on that bad boy. All right, that's it. I'm going to wrap up. Doesn't silver trade more with industrials and gold as store of value? Correct. Economy ticking up would cause you have more use cases for silver, which is one of the reasons I'm long-term bullish. I love gold because it's supposed to be this finite material. Same thing with silver. Like, we don't know how much gold's in the earth or how much silver's in the earth. Silver would be arguably much more abundant, therefore it's got a cheaper price because supply is higher. However, the utility, right, the use cases for silver, there's a lot more of it. So jewelry is the main aspect for gold, and bullion, not necessarily electronic components, although gold is used in a lot of high-end electronics. Are you steadily purchasing Ethereum? No, I haven't purchased anything in a while. Bitcoin was the last one I was purchasing. So I was on a purchasing program where I was just buying every Wednesday, buying Bitcoin, but Binance stopped the ACH process, so you can no longer connect your checking account, so I just stopped buying Bitcoin. So right now, my crypto portfolio is what it is. It's all that's in there. I haven't bought any more. I've got plenty of Ethereum, so I actually have quite a bit of Ethereum, so I'm not worried about adding any more to my portfolio. I'm just going to kind of wait and see. I think that we're going to get a lot of choppy trading in cryptos until we get to next year. And then in April, May, when we have the halving for Bitcoin, it'll start to move up. And then between late 2014 and November 2025, that's when you have your ballistic run of cryptos overall, like the big move. And then 2025, we start to have our crash in November. All right, so we got no earnings for tomorrow. Your economic calendar is very full, so pay attention to that. It's Thursday, so we're getting near the tail end of the week. I have no guests scheduled. If you guys have a specific topic you want me to cover, do me a favor, put it down below the YouTube video. If you're watching this recording, just type it down in the chat. I know some of you can't watch live, and I appreciate the comments that you put down below, whether they're good or bad. And then for those of you who are watching the show, you can always email me at TraderMerlin@gmail.com. For Lisa, I will go look at coin, which I am long-term bullish on. I think it's got a lot of problems going forward. I actually right now, oops, that's not coin. I sold a bunch of puts a couple weeks ago on Coinbase, so I'm happy with that. Keep on rallying. Those puts will expire worthless. I sold the 50s, so I don't think I'm gonna get filled on my my $50 puts, but I collected like 4% premium, so I was happy with that. Right now, you have a Harami pattern on Coinbase. And this, even though there's two green candles on the last two that you see there, that is a bearish Harami formation. The entire candle of today fits within the previous trading session, so that is a bearish sign. You know, one thing for anybody who might be looking for shorter term trades is look at the lows of today, which is right around 76.16. If we open up tomorrow above that and break down below it, I think you might have a good shorting opportunity. I, for one, would be looking to buy long-term Coinbase. But yeah, I'm not buying right now. That's why I sold the $50 puts. I was like, I'd love to buy it at $50. Fortunately, not going to get it, but I'll keep my premium anyway. So yes, I do like Coinbase. I think there's a lot of challenges ahead for Coinbase with regulators, but I think they're doing a great job of banding together the industry and putting up a fight against Gary Gensler, the SEC, and politicians who attempt to kick digital assets out of the United States and make it move elsewhere and essentially give us force us to lose our dominant lead. So these guys are really fighting for it. So, yep, love it. Bring it on. Coinbase for the win. All right, guys, that's going to do it for me. Have a fantastic remainder of your day. I'm going to go and clean up, take a rest, walk the dog, and I will see you guys tomorrow. Take care.